Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 14th, and just wanted to talk a little bit about what we saw in markets this last week, what we're seeing so far this week, and really want to answer the major question is, have we seen the end of this correction and this rolling correction that we've been in for the last 2 to 3 months, really? And so last week was a positive week in the S&P 500. The S&P 500 finished the week up 90 basis points or 0.9%, and it outperformed the mid caps that were only up 30 basis points, and the small caps, as measured by the S&P 600, were only up 10 points. So a little bit of reversal of leadership. But what was encouraging about last week as well was the value sector really led markets higher in the S&P 500. And that is a healthy sign that we really have reached the end of this rolling correction. And so we've been in a correction for the last 2 to 3 months. It really started with the small and mid cap companies really starting to roll over, and you started to see some correcting happening there. And we didn't really realize it in the S&P 500 until the large cap tech names over the last couple of weeks really started to sell off a little bit. Now, granted, the index itself, the S&P 500, really only dropped about 5% from all-time highs during this correction phase that we've seen so far in September and October. But don't be surprised if you have individual holdings that are down 10 to 15 to even 20% off of their highs this year. Because remember, the index itself is really supported by these large cap tech names that really keeps the market lifted higher. And so what we've seen in the market action today, and we got some really encouraging news today from jobless claims. Initial jobless claims were much lower than expected and down to pandemic lows, as well as we're starting to get some of the earnings in from the big banks and from other industries. And what we're seeing is those earnings are better than they were anticipated to be. As you recall, you've got some companies that have been guiding down heading into this quarter because of supply chain issues, cost of inflation. You had the producer price index come out today, and it was not as hot as was expected. Now, the inflation is still there. The producer price index is running at a higher rate than the CPI, which is the consumer price index, which is what the consumer is paying for goods versus what the producer is paying for goods. And what that's telling us is that there are going to be compressed margins for companies that aren't able to pass on significant cost increases to the consumer. But there are some companies that are able to do that, and I'll give an example. I love to give this example as I do the grocery shopping from time to time for my family, and my kids love the little snack packs of chips that they take with their lunches to school every day. And for years, it was $7.99 for an 18-pack of the take to school size chips. But here recently, those chips are now $8.49. And this is an example of a company that is able to pass on the price increases that they're feeling onto the consumer to keep their margins consistent to what they have been, and are going to have the pricing power to be able to do that. So as we're heading into earnings season this quarter, that's what we're going to be very attentive to, is which companies are able to absorb the cost, keep margins relatively similar to what they have been, and understand that these supply chain issues are going to be short term. We are going to get the logistics behind this figured out to where we're not having the backlog that we're having in ports and things along those lines, and the shortages of trucks and things along those lines, so that you can start to see some of the costs coming back down as you have oversupply coming into the marketplace. So we're very in tune to what's going on with the earnings for this quarter. We'll be monitoring that as it gets really heavy over the next week or two with a lot of the companies in the S&P 500 reporting numbers. But the banks have been reporting phenomenal numbers, and it's really caused the markets to move higher. So as any time, if you have questions about what's going on with your individual portfolio, or if there's anything that we can help you with, feel free to reach out and give us a call. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of their week. Thanks so much.